AMD. So AMD offers semis, GPUs, services, and software that can be used as a platform to help other developers design and develop semis, as well as it licenses its IP. Full disclosure, I own AMD. Good stock, good performer for me, but I'll get into more on my ownership a bit later on in the video. Okay, so the financial performance of AMD. Net income margins are very tight, incredibly tight, quite small actually, below the industry average of 18%. However, you can see that they have been improving. Now that is a good sign. Now that is a heartwarming sign. Now it's important to understand why the margins are so tight. Number one, it operates in a very, very, very competitive industry. Even though there are high margins in this industry it operates in, it's very, very competitive. You will notice, when you do more research on AMD, you will realize, like I did, that in some segments, you know, even though in some segments it has caught up, or in certain cases its market share exceeds that of established players like Intel, to get there it had to spend quite a lot in order to get there to the cost. So in some segments, it is trailing market leaders. For in the GPU market, it is trailing Nvidia significantly, but it is making aggressive headwinds. So the low margins can be associated with the cost spending to improve market share. Now, looking at the cost, because we're saying, it spends a lot to improve market share, and it does. The industry average for cost of revenue growth is about 9%. AMD is sitting at 17%, so almost double what the industry is spending. The same applies to the R&D growth. Its spending on R&D has been growing at a compound rate of about 19% over the 3-year period, 2018, 2019, and 2020. That's almost double the industry average of about 10%. So the performance highlights that AMD is chasing growth, but it's still a well-run company because margins are not deteriorating, margins are not in the dumpster fire. So it's still a well-run company. It is chasing growth, but it's chasing growth and at the same time achieving positive margins and protecting profitability. Revenue as a percentage of R&D, my bad, R&D as a percentage of revenue, R&D as a percentage of revenue, it's above the industry average. Industry average is about 20%, and AMD spends on average 22%. So it again explains the growth trajectory, the growth strategy that AMD on. It's willing to spend significantly to not only grow but also maintain its market share. Now, the strategy does appear to be working because when you consider that net income margins have more than doubled, we went from 6% to 13% in 2020, so 2020. Furthermore, revenue has been increasing at a compound rate over the same 3-year period of 24%. Way above the industry average of 8%. So costs are justified in achieving returns on both the top and bottom line. So there is a return that AMD is achieving on its production cost in achieving growth in the top and bottom line. The ROE, however, is below the industry average of 26%, but you can live with it. That's because the ROE performance does indicate that AMD is able to generate returns on operations from the equity invested. And considering, the other margin, the other metrics, margin, performance and cost as well as growth, and my top and bottom line. You can, I can accept the performance in the ROE. The financial performance, starting off with the current ratio, it's been improving below the industry average of 2.37, but the performance is still satisfying because it's been improving, stable, is strong, shows that AMD does on average have well over two current assets per the current liability. So current asset exceeds current liabilities by a factor of just over two. The asset test ratio, again, below the industry average. Industry average is 1.88, but it's been improving. And looking at the rate it's at, it indicates that AMD does have sufficient liquid assets to cover liquid liabilities. On average, liquid assets exceeds current liabilities by a factor of over one. In 2020, it's actually almost close to two. So that one can live with. That is satisfying to a degree. Now, considering that both the current and the asset test ratio have been improving, and the performance is not radically disappointing. It is comforting to see that AMD does have enough current and liquid assets on the balance sheet to settle current liabilities. Thus, there's no real liquidity risk. The balance sheet is significantly liquid enough in my view. The inventory days have overperformed the industry average. Industry average for inventory days is about just over 101 days. On average, AMD's inventory days are at 7. So there is an overperformance in relation to the industry. It's a good indicator of liquidity, supported by the asset test ratio as well as the current ratio. It shows that there's no liquidity burden on AMD's balance sheet. Now, AMD's debt to equity has significantly improved. I mean, my goodness, it has more than reduced its debts from 2019 to 2020. I mean, there's been a significant improvement there. It's still above on average the industry average of 126%, but there is a pleasing trend, because what's happening? It's been decreasing. So it's a very so this performance, this decreasing performance, this improvement is very pleasing. It makes the balance sheet very attractive, and it makes AMD not that financially risky. Not have that much financial risk on the balance sheet. So overall, low financial risk, low liquidity risk, good attractive balance sheet. The financial position, so as well as the financial position of AMD is pretty good. Now the cash position. Now the cash margin, very little, very little. I mean, 1, 7, 11%. There is an improvement, but it's very little compared to the industry average of about 32%. It is quite disappointing at first glance, but when you consider the strategic position that AMD has adopted, it is understandable. It's important to note that the margin does indicate that AMD can at least generate cash from its operations. So on average, it generates about 6% of cash from revenues. In 2020, it's 11%. So but that again highlights the strong improvement in margins. So overall, yes, it is disappointing, but it does show you that operations do at least generate cash. AMD is not just mindlessly burning through cash, as evidenced by the fact that the sufficiency of cash flow on average at just over 1 is above the industry average of 0.84. So, these two ratios combined, when you read them together, it shows you that the business model does generate cash from operations. It does have enough cash to settle, things such as debt and investing in operations to achieve, long-term shareholder rewards. So it is the cash position is decent. It shows a growing company that is well run, that does actually have cash. So both ratios are impressive. They've been significantly improving. Happy with that. Not rewarding shareholders at this stage, but that is understandable considering its strategy is more pivoted towards growth. So that is understandable. I don't have a problem with that. The PE is quite high, at just over 55. It's actually above the industry average, which is about just over 40. So it is a very expensive stock. But when you consider the fact that you are buying high quality growth, does in a bit make sense. It is high, but does make sense, considering what you're buying. So all of the above, when you consider the fact that it has a positive cash flow position with an attractive balance sheet and a strategic outlook that's geared towards growth, and that expenses, even though they are high, are not wreaking havoc on the growth market. Yes, they are growing, but they're not growing at the expense of profitability. Overall, in my view, it's a good company. Yeah, quite expensive considering the PE is trading at, but you consider what you're getting. I don't think, so relative to what you're getting, I don't think AMD is that expensive. I think it is an affordable stock. Yeah, you can see that there has been a decline in the stock, but that's just that market correction that has been happening since the beginning of the year. But still, in my view, still a good stock. All right, that's enough about AMD. Moving on.